is a chart we've showed many, many times. It is the yield curve, the 2s10 spread. It's a single best chart. Here's the day of the election. Here's the day after the election. Here's the enthusiasm of Republicans in control. And we roll over once, we roll over twice, we roll over now beneath where we were on November 8th. Do you care about the yield curve, Michael Wilson?
Absolutely. So let's talk about what's going on here. First of all, you did get the sort of boost after the election, and people got probably a little too excited. And we saw that reflected in the equity market, in financial small cap stocks and some of these high beta cyclicals. And quite frankly, we've been now pricing Trump and Republicans out for the last 4 or 5 months. And I would argue that a lot of the pro-growth policy stimulus is now being priced out. Can you scroll that back, Tom, like 3 years back to 2014?
Well, I think we can do that. See how it pops in here, folks? Get that chart up now. We're demanding to do this here on the Bloomberg terminal. We can do it for Michael Wilson. It's a log chart. Slope matters. Down we go with that gradual flattening of the curve.
Maybe even a little further.
You're killing me here. James Gorman would never do this if he was on. There we go. 2014.
There we go.
Bonus round. We'll go. Do you love this, folks? This is how you use a terminal at Morgan Stanley.
So look at what happened. The yield curve actually peaked in early 14. What happened in early 14 or end of 13? That was basically tapering, the QE tapering. That was the beginning of the hiking cycle or tightening cycle for the Fed. And so that's the primary trend. The yield curve is moving down for the last 2 or 3 years as the Fed tightens. And so this is very normal as the economic expansion continues. So we are late cycle, classic late cycle. The yield curve probably will continue to flatten until we get to the end of this cycle. But that's not necessarily an ominous sign for stocks yet. It might be next year, but not today.
Michael, I've got a chart which shows that investors are pulling money out of U.S. small caps at the fastest rate in a decade. Is that the right trade?
Well, they were probably putting it in at the fastest rate after the election. So, no, we actually think small caps could have another relative move later this year on a couple of things. First of all, the earnings growth for small cap stocks has been even more powerful than for large cap companies. It makes sense. They've got more operating leverage. They are the beneficiaries of deregulation and potential tax cuts, which we actually think still happen. We think tax cuts will happen in by the first quarter of 2018. So we do believe small caps are going to have another run here on a relative basis.